Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. US and China make headway in ending their trade war, but Donald Trump now turns focus to India and Turkey. The trade war has already taken a toll on China, with the administration lowering GDP growth targets to its lowest level in nearly 3 decades. Automakers failed to make much headway in February, with total sales by and large remaining muted. And the Indian Air Force maintains that it hit the intended targets in Balakot. Air Chief Marshal B.S. Dhanoa says it's not up to them to determine the number of casualties. That was a strong statement, and it was the talk of town yesterday for sure. However, let's take a look at the trade setup for the day, because those troubles, the border tensions don't seem to be over. We'll get to that. First, the news that just came out a little while back, and the Chinese growth news. China has lowered the growth target and cut taxes as the economy slowed down. The 2019 GDP target is set at about 6 to 6.5%. They've moved to a band instead of giving a point target, because it would enable them some room to maneuver around. But if they clock in a 6% growth, GDP growth in 2019, this would be the lowest growth in nearly 3 decades for China. That's the extent of damage that the trade war seems to have had on the Chinese economy. We'll get in experts to talk about this as well, but this should be interesting. Note, however, that equity markets don't necessarily toe the line of GDP growth. The Chinese markets grew the fastest in a really long time. The market didn't do as much. Could the markets do much better even the economy is slowing? It possibly could. So just keep that at the back of your mind. By the way, the tensions around India and Pakistan don't seem to be ceasing. The IF, a jet shot down a Pakistani military drone near the border. This is the latest on the simmering tensions between the two neighbors. This happened sometime late last evening. And a story around this, of course, on the website as well, in case anybody wants to see. So as and when more updates keep on coming in, we'll try and get you all the latest updates. How does all of this impact trade? Well, difficult to say. I mean, the world markets had a bit of a pullback in trade yesterday. So if you look at what the US markets did in trade yesterday, they came off after having a reasonably good Friday session. That's led to the Asian screen also coming off a little bit. The SGX Nifty, remember, a day delayed, but our Nifty will react a day delayed to the SGX Nifty or to the Asian markets. For now, showing a number of 10,829. Have a ho-hum kind of a morning in the session today. The Nifty March futures, of course, closed at about 10,917, which is a premium of about 54 odd points. And the max OI for the March 28 series is now even narrower. The range shifted from a very wide range of 10,000 to 11,000 to 10,500 to 11,000, and now, as of now, the options, the call and the put data seems to suggest that it's 10,700 to 11,000, which is what option writers are betting for this expiry. What continues unabated, though, is fund flows, foreign flows. And while the numbers may not be really exaggerated, but if you just look at what's happened each and every day for a number of days since the Kotak deal happened, by the way, which was a day earlier, but Feb 25th, 26th, 27th, we've had positive flows coming in. 28th Feb was a positive number, and 1st of March, the provisional number is also a positive 200 odd crores. So the FI flows continue to come in, which is essentially a pretty good sign. However, while all of this is fine and the markets may start off okay, there are specific stocks that could react in the session today to Donald Trump's tweet, maybe, but to specific news that came out too. So firstly, auto sales, and I thought a couple of 2 or 3 names stood out. One, Eicher Motors, the numbers which came out, the sales were down 14% at 62630 units versus estimates of 70,000 units. So in all probability, Eicher Motors, I won't be surprised if Eicher Motors has a small negative reaction as well. After the auto sales numbers, Credit Suisse came out with a note on Bajaj Auto. They have downgraded the stock to a neutral from outperform and a target price of 2,700 from 2,950. They believe that it's trading at a steep premium to peers despite upcoming risks, and that is one stock that you should monitor because of the brokerage house which is downgraded. VST Tillers, on both counts, power tillers as well as tractors, the sales were down nearly 40%. Not the best of months. Could show a reaction. Jet Airways and 2 more aircrafts have been grounded. The total fleet strength now stands reduced to 99. And the total aircrafts, therefore, grounded now at about 25 aircrafts. They're trying their best to resolve the situation, but this could well have. It's not had an impact on Jet Airways until now. Let's see if it does have an impact going ahead. Hindustan Foods is interesting. While Westbridge is a buyer, the fact that 6 Cents India Opportunities Fund, which is Nikhil Vora's fund, has sold 15 lakh shares in that market, in that deal, might make a buyer or two interested in this deal. So it'll be interesting to see which way Hindustan Food reacts. The buyer is a good one, but Nikhil Vora selling out such a large chunk when he's been so bullish could be an interesting reaction on Hindustan Foods. Last but not the least, media reports seem to suggest that PFC has put up a 12,000 crore ceiling for REC purchase. They're saying they cannot pay more than 12,000 crores. Let's see what happens to both of these. Incidentally, REC's chairman PB Ramesh has been moved out of REC as well. The report again suggested because he was not towing the government's line. It will be interesting to see what happens to both of these counters, particularly REC, in the session today. So all of those stocks to monitor. However, lots more to monitor on the world economic front as well, and that will be the part of First Word too. But since the world's two largest economies are finally nearing the finish line on a trade agreement, the deal could be signed by President Donald Trump and his Chinese counterpart Xi Jinping as early as this month. But we start off with that piece on First Word because all of this doesn't mean that the trade war is over. Because on one hand, China wants $200 billion worth of tariffs immediately removed as it starts to hurt its economy. And on the other hand, the US wants more to ensure that Beijing will follow through on its commitments. So we talk about this and more immediately on First Word. Then we, of course, move on to talk about what's happening to auto sales because there is no acceleration that we're seeing in the auto sales numbers. So that's the second piece on First Word today, an important one to monitor. We talk about L&T's fortunes and how they might be turning based on the autos, based on the order inflows that we've analyzed thus far. So that's the next piece on First Word. And last but not the least, GST, and whether it's in the current form a good or bad number, former Finance Minister P. Chidambaram continues to criticize GST in its current form. We get you his arguments in a panel last evening. Okay, as I said, the world's two largest economies are finally nearing the finish line on the trade agreement. The deal, in fact, could be signed by President Donald Trump and Xi Jinping as early as this month, but that doesn't mean that the trade war is over. On one hand, China wants $200 billion worth of tariffs immediately removed as it starts to hurt its economy. On the other hand, the US wants more to ensure that Beijing will follow through on its commitments. Andrew Brown of Bloomberg News Economy Forum talks about where things stand.
The Chinese really, really want these tariffs, $200 billion of tariffs, to go away for three reasons. First, it's a direct hit to Chinese growth. It's killing the private sector. Record levels of bankruptcies. You're seeing defaults on bonds. You're seeing job layoffs. You're seeing smaller pay increases, and in some cases, factories keeping workers at home and giving them a minimum wage. So that has led to a big blow to business confidence. Business confidence is right now about as bad as it's been in a generation since the early 1990s, and general disquiet in Chinese society about slowing growth. The Chinese are used to rip-roaring growth year after year. They've had it for the last 30, 40 decades. Finally, this is all leading to a questioning of the government's stewardship over the economy. And don't forget, it's economic stewardship that is the bedrock of its political legitimacy. And even you're starting to hear some muted criticism about Xi Jinping's leadership. Has he aggravated tensions with the United States? Does he know what he's doing in what has been essentially reversing years and years of reform and opening put in place by Deng Xiaoping? For all the reasons that the Chinese want the sanctions lifted or want the tariffs lifted, the hardliners, and I would count Lighthizer as one of those, but also figures like Steve Bannon in the background, are very reluctant to give up the tariffs lightly. You have to remember, for the last 20, 30 years, U.S. trade negotiators have gone to China as supplicants. Please, make some concession. And now they're going to say, hey guys, what have you got for us? Because they know that these tariffs are hurting. So how do you get rid of these? They see not just an opportunity, but a historic opportunity, and perhaps the last ever opportunity for leverage in order to extract extract the deep, meaningful concessions on structural changes in the Chinese economy that ultimately. So the question is Trump going to go for a deal which is going to give him a short-term boost, maybe lift those markets that aren't doing so well, and is he prepared to do that and sacrifice America's long-term trading and business interests?
Interesting to see, one, what happens to this trade deal, and whichever shape and form it takes, how soon can it help restore some sanity to growth for both the economies? Because as China's forecast for 2019 shows that the trade war is already hurting, and it might, at 6%, show the lowest growth in 3 decades. So what does all of this mean for global financial markets, more importantly? Let's pose this question to Seth Freeman. He's Senior Managing Director at Glassratner Advisory and Capital. Joins us on the phone line from San Francisco. Seth, good having you. Thanks so much for joining in. Thanks so much for staying up
Thank you.
as well. What do you make of, one, this whole negotiation on the trade war and China's growth forecast of 6 to 6.5%? What does it mean for financial markets? Because typically in the last couple of decades, we haven't necessarily seen equity markets toe the curve of the GDP growth that different economies show.
Well, this is one of the lowest growth for China in some time. And, I think it shows partly the maturing of the marketplace and its structural changes, and most likely some of the impact on exports due to the trade war. On the other hand, of course, in 2018, a lot of imports from China to the United States were front-loaded. But we're in a transitional point, and I think that we're also seeing slowing growth, across the world.
Would that have a big bearing on the Chinese market set? That would be the first question, because, one, as I said, when China's economy grew really well, it was not as if the markets went bonkers. And if the MSCI weightage on China is set to increase and flows go out there with the valuations that it is trading at, would the Chinese markets really get bothered if the growth slows down to 6.5%?
Oh, I think that's a significant marker for a slowdown, and it should affect the money flows significantly. So it should be interesting to see what happens in the following days.
So how are you keeping the larger emerging market pack, and what's the view there, Seth? Because China, with all the stuff that we spoke about, India has the elections coming up, and the cross-border tension hasn't quite gone down as yet. What do you do with some of the larger emerging markets?
Well, normally the market does well during the election, during the run-up to the election in India. So that should get investors' attention. There's still quite a bit of political overhang in terms of from at least U.S. investors looking at China. But I think in general it's positive for India. And I have been surprised, frankly, that the increasing skirmishes at the border with Pakistan hasn't had the same kind of effect we've seen in previous years.
Why do you reckon that's the case? Is the market discounting this as something that will not escalate too much?
Well, it's interesting because it seems like the activity is at a much higher level in terms of planes and India going into Pakistan and so forth, both sides being more aggressive. But maybe it's just because there's not as much just focus given other activities in India, like you said, the election. But you would also think that this kind of fits in a little bit to the nationalist story to go after Pakistan. So maybe it is actually related to the election.
Seth, so therefore, my final question on this conversation, what's your view on the Indian markets right now? Would you go out and tell clients to invest into India with whatever the markets are discounting right now, both on the geopolitical as well as on the election front? Or would you advise people to stay put and wait for the results to come out in print before we move ahead?
Well, I'll tell you, over the last 15 years, I've maintained a long-term view on India, and that doesn't change. I think for investors, we have to also, for U.S. investors or dollar-based investors, we also have to look at the rupee depreciation, because that if the rupee's declining and the market swoons, it's sort of a double hit for USD investors. So I think that has to be a consideration, because if you factor in the market, the index growth, and back out rupee depreciation, the returns are not as high. But the long-term growth for India, in my opinion, is totally intact.
Okay, Seth, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us that perspective. So that's the...
Thank you so much.
Really appreciate it. That's the, global verdict. The markets at least don't seem to be terribly bothered about all that's happening. Indian markets don't seem to be too worried about the upcoming election verdict overhang, as well as what's happening across the border too. For now, steadfast. Let's see how it goes. However, if the market should be worried about something, it should be about the auto space, because deep discounts don't seem to have moved the needle in a meaningful fashion in February. Automakers continue to suffer from a high base and a general slowdown in demand. Yatin Mota's here to put all the numbers into perspective. New launches, deep discounts, have they had any kind of material impact on sales, Yatin?
Good morning, Neeraj. As we were discussing, last week, that how really auto sales have not been recovering from the weakness that we saw since the festive season, which is basically post-October. And that weakness continues despite the OEMs expecting that there could be some bounce back in demand for February. That is not really happening. In fact, hardly one or two companies managed to beat the Bloomberg Quint estimates or the general market expectations which were there with respect to the auto sales numbers. Starting with Maruti Suzuki, and for the benefit of our viewers, I will talk about all of the companies that came out with auto numbers since last week. If you look at the overall sales, they were down by 0.8%, and this is on the back of a 20% decline in exports. And the mini segment, of course, there was phasing out of the old Wagoner. That saw a decline of nearly 27% year on year. Talking about other auto companies like Mahindra and Mahindra, Tata Motors, all of these companies also saw some weakness in their overall business. Tractor sales were down 8% for M&M. The automotive sales after the launch of the new Marazzo and XUV 300 has seen some traction, 10% growth for that segment as well. For Tata Motors, the domestic sales were down 3%, and this is on the back of weakness in both the auto segment as well as the commercial vehicle segment. We had the JLR US sales, which recently came. However, that saw a growth of nearly 30% overall. The US market has been doing well. Talking about the commercial vehicle players like Ashok Leyland, Escorts, all of these players again had slight weak numbers. Ashok Leyland, the medium and heavy commercial vehicle segment, which is basically the core truck business, the sales were down 4%. Escort sales were up 12%. And talking about all the two-wheeler players, starting with Bajaj Auto, they saw fillip largely because of the export market. So if you look at Bajaj Auto, the Feb sales were up 10%. However, the growth was largely driven by the export markets, wherein the motorcycle exports were up 16%. And the domestic motorcycle sales were up 6%. However, commercial vehicles, the three-wheeler business, domestic sales were down 9% on a higher base, and exports were up 37% for a company like Bajaj Auto. And post the market hours last week, we had Hero MotoCorp as well as TVS Motors, Royal Enfield, coming in. Hero Moto slightly better than the expectations, but still the total sales were down 2%. Similar is the case with TVS Motors. Total sales were up only 3%, and Royal Enfield, we were talking about that. There also we have seen weakness in the overall demand. The management in the last conference call said that markets like Kerala, wherein they are losing some couple of thousand units because of the situation which has not improved post the flood. So Royal Enfield total sales were down 14%, and the trend of weakness continues there, especially for Enfield as well as Hero MotoCorp.
Yeah, Royal Enfield in particular, much lower than what the estimates were. I'm guessing brokerages will probably at some point of time come back with whether the pain is in the price or no, because at 19,000, it's off quite substantially from the levels it was at. Yeah,
clearly from levels of over 33,000, the stock has corrected on the fears that the growth is slowing for the core 30% EBITDA margin business, which is Royal Enfield. very difficult to say as to when the sales will recover, because the management is hopeful that the price hike that they have taken, shocks to market like Kerala have not yet made them come out of the woods. So all of these are the factors possibly because of which Royal Enfield sales are under pressure. But the management is quite hopeful that the new 650cc motorcycles, their strategy in the export markets, domestic market strategy, all of that will probably add up in the numbers going forward. The medium to long term, view as per the management was quite positive. Okay. Short term, there were blips because of the price hikes on the back of insurance cost. But let's hope we have some substantial improvement in sales moving ahead, because else we could probably see the sharp, peak on traction for companies like these, because the multiples are based on growth assumptions and the fact that they are able to sustain a 30% margin. So if the sales are not coming in, if they go in for discounts or repricing, then again earnings in some form would take hit.
Okay, Yatin, thanks for putting that into perspective. So that's the auto sales verdict for the month of February gone by. Now, while you analyze auto numbers, it's also important to analyze the numbers for some of the cap goods stroke infra companies, Larsen & Toubro in particular. While it's been struggling to achieve its targets for a few years now, the company's been forced to cut order inflow guidance for 5 years in a row. However, fortunes may be turning for the country's largest infrastructure company and construction firm. Not only has L&T maintained the guidance this year, but there seems to be a good chance that it could exceed its projections this time. Why? Well, Darshan Mehta has the math. Morning, Darshan.
Good morning, Neeraj. So basically what we've seen is that first of all, L&T has been announcing a lot of orders of late, and that's why we wanted to see whether they will do it or no. And secondly, they've changed the accounting, the way in which they present orders. So they present it in 4 buckets and they don't give an exact number. So that makes it a little difficult. But it seems with the numbers that have come out that, and we back tested it 5 years data that we had. For the past 5 years, they have been cutting order inflow guidance. It could be in the second quarter or third quarter, but they have been cutting. This time around, it seems that they will meet the guidance. So in FY14, they cut the guidance to 15% from 20%, and that happened in the third quarter. In FY15, from a 15%, they moved it to 5 to 7% growth that came in. In FY16, they cut it twice, first in the second quarter and then in the third quarter, to a flat order inflow. Again, in FY17, they cut it from 15% to 10% in the third quarter. FY18, again, they cut it from a 12 to 14% to a flat rate that is there. This time around, they haven't cut it, the order guidance. They have maintained it at 10 to 12%. And in the first quarter, they had said that the orders will be front-ended. But somehow it seems that, they are well on track this time around. Even in the second half of the year, the numbers seem to be coming for L&T. And remember, the fourth quarter in terms of order is always the strongest that is there. So just to give you a brief of what the maths is, the total orders that they got in FY18 was 1,52,000 crores. For a 10% growth, they have to achieve 1,69,000, and for a 12% growth, they have to do 1,71,000. So till now, they have gotten orders worth 1,20,000 crores. This is as per the third quarter results that came out. For a 10% growth, they have to do 47,000, almost 48,000 crores of orders, and for a 12% growth, they have to do almost 51,000 crores of orders that for them to meet the guidance. Now, if you're looking at what's happened of late, the inflow from a 49,000 crore order, and in the first quarter it was 36,000, and you've seen a steady improvement. And as history points out that the fourth quarter is the strongest, so probably a number in higher of 42,000 crores can be anticipated. If you go by history, that is the strongest number that they have. Now, if you take a look at what exactly has happened in terms of the change in order, what L&T has done is that they instead of giving orders initially, even if it was like a 900 crore and 920 crore order, they will say it's a 920 crore. Now, because of competition heating up and they don't want that to be disclosed, they have split the orders into 4 buckets. So significant, large, major and mega. So you don't know, the order could be, let's say for a large order, it could be 2501 or could be 4999 crores. So you don't know what it is. So for calculation, most of the analysts have started taking the median of the order inflow that has come in. So this is what L&T has done this time around. Now, take a look at the orders that have come in. Two of them were mega orders. So in February 2000, in February, the last one was the mega order of an airport construction that came out. So that means an order in excess of 7,000 crore. Majority of the orders that they've won is either in the construction or the hydrocarbon space. So that is something that you've done. So again, a significant order in the power, T&D and water. In building, they got a construction order, which was a large order. Again, they got a mega order from Algeria in terms of the hydrocarbon business. It was a mega order that came in terms of, again, another hydrocarbon order. So in the fourth quarter, they've already done more than 10,000 crores of orders only in the hydrocarbon segment. The last order that they said was the 1060 crore BharatNet order. That was a construction order. Post that, they didn't give the Saudi Aramco. There were two orders there. They haven't given what type of order. And from Jan 31st, they've just started putting orders into these buckets. So that's the trend that you've seen. Now, how much does it need? Now, if you take the minimum and the maximum value that is there, they have done orders worth anywhere between 21,500 crores to 30,000 crores. If you take the median, until now, they've done close to 25,000 crores of orders that come in. And this probably does not include the smaller, less than 1,000 crore orders, which are plenty for them. So that's the trend that we're seeing. And as of now, it seems that L&T will be is in target to meet the order inflow guidance. Whether the lower end or upper end, we are not sure, but they will meet the guidance as of the data that's given today.
And are brokerages on the sell side optimistic about this?
Yeah, they are optimistic. So a couple of them that they have come out. First of all, there is Credit Suisse. They have said that this time around in the third quarter, they have announced orders as per the median close to 27,000 crores, and that's something that we also got. And they are saying order flow for fourth quarter could well, as of now, reach 40,000 crores with the smaller orders that have come in and the orders that they have not disclosed. So they are positive on it. Bank of America Merrill Lynch says that the high earning visibility and strong book to bill ratio of 2.6 times gives them significant amount of opportunities going ahead. So they are positive on L&T. And Morgan Stanley is saying that the momentum in the fourth quarter appears reasonably strong at this point of time. For their order calculation, they had taken the median. So as per what brokerages are saying, what the orders that they have given and the past trend that we've seen in the fourth quarter being the strongest, it seems that L&T this time around, after 5 years of cutting guidance and this time they maintained it, could well be on way to meet the order inflow guidance this time around.
Well, let's wait and watch. Brokerage is optimistic. The data suggests positivity. Let's see if it translates into the number that the street will be watching out for when they come out with the results. Darshan, thanks for putting that into perspective. As we end first word, let's hear out former Finance Minister P. Chidambaram, who criticized the implementation of GST and its design, says two central ideas of the tax regime have been thrown out of the window by the NDA government. He was speaking at a panel after release of his book, Undaunted, Saving the Idea of India. Listen into what he had to say.
Close on the heels of demonetization, they implemented a flawed GST. The design was flawed. The implementation was flawed.
GST was a Congress idea.
The Congress idea, but the design was not ours. That is not our design. In fact, you go back and read my speech in Parliament. I said, what is this? This is not GST. Call it by any other name. My president gave it a name, but I didn't give that name. I said, call it any other name. Why do you call it GST? This is not GST. GST, what are the two central ideas of a GST? One, it is a single rate. With whatever you don't want taxed, zero rated. It's a single rate. And second, it is a non-cascading tax, which means there must always be input tax credit and output tax liability. Now you've distorted both. You've distorted both by having multiple rates, and you're now removing input tax credit in many, many areas. If you remove input tax credit, we go back to the old cascading regime of sales tax, isn't it? I mean, the two central ideas of a GST have been thrown out of the window.
So you're going to have only one slab.
It'll be one rate, and one rate means what Dr. Arvind Subramaniam said. Yeah. It'll be in the transition period, a standard rate minus, standard rate, and a standard rate plus. But that's a transition. Eventually, it'll be one rate.
But Mr. Chidambaram,
I know it's difficult for people to accept it. They come back with this argument, which the finance minister comes back. Can Mercedes-Benz be taxed in the same way as something else.
That's not.
I mean, that's a hackneyed argument. That's not an argument. If you don't want GST, say so and go back to the old system. But if you want GST, everything, there must be one standard rate.
What would that rate be?
It will be a rate which more or less approximate to what Arvind Subramaniam's report said.
Which was?
He said 14.5, 15. 15%. It could be lower if there's greater compliance.
Okay, and I'm sure those conversations will continue. That's all that we have on First Word today, though. A quick programming note: we discuss what AMCs are doing in the current scenario with Harsha Upadhyaya of Kotak Mahindra AMC. Dealer checks indicate pricing power returning to cement makers. We talk to N Srinivasan of India Cements, and then speak to Girish Agarwal of DB Corp on factors that could lead to a strong revenue growth in the coming quarters. But after this break, a full tilt towards the day's trade.
संगी सुनामिता रोनी बाबू ददासिया चारों कोती सुन बिहान हरिहर खेत भरे कलिहान गद का कैसे करो बखान छत्तीसगढ़ मां बसे परान छत्तीसगढ़ मां बसे परान।
नई सरकार है तो नई उम्मीदें तो होंगी ही। प्रदेश के नए मुखिया भूपेश बघेल ने जब से अपना वादा निभाया है, प्रदेश के किसान चैन की नींद सो रहे हैं। घोषणा पत्र में किसानों से किया गया वादा, मंत्रिमंडल के शपथ लेने के मात्र 2 घंटे में 2 बड़े वादे पूरे किए संवेदनशील सरकार ने। एक ओर जहां प्रदेश के 16,65,000 किसानों की 6,100 करोड़ रुपए की कर्जा माफी की, वहीं दूसरी ओर देश में सबसे अधिक 2,500 रुपए क्विंटल पर धान खरीदी की मंजूरी देकर उनके मन की मुरादें पूरी कर दी।
ऋण माफी के साथ साथ 1,700 जो समर्थन मूल्य है उससे बढ़ाकर 2,500 रुपया में दोनों फैसले हम लोग लिए,
जिससे प्रदेश के किसानों के चेहरे पर मुस्कान आ गई है और उनके आर्थिक और सामाजिक प्रगति में बढ़ोतरी हो गई है।
मोर खाता के पैसा हा कटगिरी से सबो हा वापस आ गए।
जुग जुग जिए हमार दुलरवा बेटा।
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people. Where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Friday session was encouraging. We made our approach towards 10,900, but nonetheless, the weekly positive close is something that's more encouraging, be it for the banks, and IT once again is leading from the front. So the IT index itself for the week was up closer to 1.5% or 1.3 odd percent.
We've been marking this for a while now, how the weekly performance of that space has been doing okay. But interesting, the start here, I mean, the world markets yesterday were a bit soft, today slightly soft. So maybe a muted start, but it shouldn't be a worry, I guess.
PSU banks, though, had a roaring rally. The last week itself, aside from the fact that you've been seeing the impact of the additional funding that's coming in, but the fact that the finance minister is saying that they have the funding support that they will be giving to PSU banks to make sure that many of the banks come out of the PCA is something that's probably lending a little bit of a fillip for these banks as well. So we'll be watching out for all of these individual pockets come trade today. But like Neeraj said, right now, there's not much of an indication coming in from global markets, absolutely flat for the SGX Nifty as well. But important to take note of what's happening in the derivative space. Agam Vakil, he's standing by with the update. Agam.
Thanks. Well, we did see some amount of gains coming in last Friday, and based on that, we also saw about a short covering as far as the Nifty is concerned. But the Nifty banking futures actually did see a substantial addition in open interest, with the OI moving up by as much as 18%. So that's why we saw fresh longs. But positive cues in terms of both these, indices. The VIX also came off quite substantially, down 11%, now at around 16.3, comfortable levels when it comes to trading moving forward. And in terms of your open interest change, we're keeping an eye on 10,800 put and the 10,900 put, where we saw a lot more writing coming through, given the fact that the Nifty was edging higher on that day. This is, of course, your open interest distribution at this point, which is indicating the 10,800 level as a one which could see some amount of support at this point in time. On the higher end, of course, it continues to be with 11,000. Moving on to your Nifty banking put call ratio, that is edged higher to around 1.6, but the Nifty put call ratio remains at around 1.7, relatively elevated levels. Keeping an eye on Reliance Power and Arvind, considering the strong surge that we saw in its underlying, as was the case for Oriental Bank as well, which also moved up by around 11%. And in terms of unwinding, Hero MotoCorp is the one stock that I'll be keeping an eye on based on the subdued auto sales that we've seen for not just Hero MotoCorp, but a lot of these other two-wheelers. So watching out for that. It was a mixed day of trade, something that we are expecting to continue today as well.
All right, Agam, thanks very much for that. So we'll be watching out for all of those individual pockets. Let's bring in a market voice then. Mayuresh Joshi, fund manager at Angel Broking. He's joining us on the show right now. Mayuresh, just quickly, starting off with the February auto sales numbers, not much of a change there, and really not much to talk of in terms of whether there has been a pickup in the industry, because the numbers are definitely not showing it. Does it look like the pain could continue for a slightly longer period of time?
Morning, Davina. Oh yes, I think as one would believe, I think the numbers were soft for the universe as a whole, with a few exceptions. But a large element in terms of demand catching up, I think it's going to be a very slow and a gradual process. With the inventory that probably lies in the system at this point of time, I think it's going to be very, very slow and gradual in terms of recovery, whether it's two-wheelers, four-wheelers, or even the MHCV sales. One can very well argue that over the next few quarters, as BS6 norms start kicking in from April 1st, 2020, you might see pre-buying happening from the third quarter. But again, I think till that point of time, at least the next few months, I think the pain might still persist and sustain for the industry as a whole.
But within the pocket as a whole, would you have any preferences?
So again, I think a little bit of a bias towards the two-wheelers, because if you probably see how the pecking order probably stacks up at this point of time, and the expectations in terms of how the monsoons can pan out, along with the MSP increases that you've probably seen. Now, I think how does that percolate probably into the discretionary spending, specifically from the rural and the semi-urban side, is to be observed. But I think if all these elements start playing out in a gradual process, two-wheelers with the entry points that they probably are at this point of time, discounting still probably remains relatively higher for the entry-level bikes at this point of time. And the third element, I think the input costs have started stabilizing. So for the two-wheeler manufacturers, though there might be short-term pain, because realizations obviously are going to be a little bit subdued because of volumes probably remaining subdued. At the same time, discounting and the effect on margins is going to play out. But as volumes start picking up, which they will over the next few months, and two-wheelers probably will lead the way, I think specifically a few of the two-wheelers do probably look good over the longer period of time.
Mayuresh, what about two names which didn't come out with the best of numbers? What would you do with those stocks? Eicher Motors or VST Tillers, wherein both the tractor and the power tiller segment were down?
So again, individually, Neeraj, I think if you look at both these stocks within the spectrum that they probably operate out of, obviously I think Eicher has got his own sweet problems, which is again allied to the two-wheeler industry as a whole. But largely, again, I think the normalization that one really expects its twin 650 cc's to probably start delivering, and our channel checks are suggesting that the demand there probably looks very, very strong. The export markets is something that they're also probably looking at. So yes, I think it was disappointing, no two ways about it. But I think it's that entire argument that one is probably talking about when normalization does start taking place and the expectations of these two twins probably expected to do well. I think they should hold the fortunes. On the commercial side of the business, obviously, I think the discounting factor, as I said, still remains relatively high. But again, from the third quarter, as volumes start picking up in anticipation of the pre-buying for BS6, you might see some volume activity actually holding up for more players within the MHCV stroke LCV space. So yes, I think iShares is where our holding continues in our portfolios. The pain, as I said, might very well continue. For VST tillers, again, I think when you're probably talking about tillers versus tractors, I think it's a very, very interesting argument because the price points at which tiller probably gets sold compared to a tractor is relatively lucrative for land holders who are probably holding very, very small pieces of land where mechanization of improvised tractors probably is of no help. The second element obviously is going to be the land holdings in India itself. And when you talk about the land holdings, I think a majority part of the land holdings are very, very small. I think in terms of hectares, I think it is hardly accountable in terms of large land sizes that tractors can be used for. So I think tillers probably become a very, very feasible option. But the third element obviously is going to be how the expectations of monsoons are and what kind of a discretionary spend does actually come through. So I think the company does stand out. It has got competition. The utilization levels obviously are a little bit on the lower side in both its manufacturing plants. But for leverage to kick in, again, volume should pick up. So I think it's a wait and watch for VST tillers.
All right, lots more to talk about aside from autos as well. Mayuresh, just stay on with us. We've got a research team standing by to talk about some more stocks and news that could see a price impact today, as well as some brokerage calls in Coal India. The production and offtake numbers are out, so Nikki's here to highlight that for us. Mishika, let's start off with you first, though, on stocks news.
Yeah, so there are a number of stocks that we need to look at today. We have sales number of VTS tillers. Power tillers sales were down 41% at 1,495 units, and tractor sales were down 39% at 581 units for the month of February. Then Tata Motor sales numbers were really good. JLR US retail sales jumped 29% year on year, and Jaguar February sales were up 59%. Land Rover sales were up 19% year on year. Now in SBI, frauds have amounted to rupees 7,951 crores during the first 9 months of FY19. All the accounts have now become non-performing assets. HT Media acquired 48.6% stake in Next Radio for rupees 171 crores to derive synergy of FM operations of the company. And lastly, we have Jet Airways. 6 more aircrafts have been grounded due to non-payment to lessors, which increases the number of grounded aircrafts to 25, and the fleet is now reduced to 99 aircrafts.
Okay, Mishika, thanks a lot for that. Some brokerage calls, Amit?
Well, a couple of them. The first one is on Bajaj Auto, where Credit Suisse has downgraded the stock to neutral from outperform and has cut the target price to 2,700 from 2,950. Now, according to the brokerage, going forward, the domestic business of the company will see serious headwinds, and it says that the company is currently pushing the inventory for Bajaj Pulsar, given the before the ABS norms has been implemented. And for the three-wheeler segment, it says that a shift towards electric vehicle on the back of the government trust and cost increase post the BS6 implementation could also pose a risk for the company. Now, this combined with a high base of April 2018, the brokerage is expecting the numbers to decline from April 2019, the percentage to decline from April 2019 for Bajaj Auto. Lastly, it says that the stock also trades at a premium compared to its peers, given the upcoming headwinds that are there for Bajaj Auto. The second is on the consumer sector, where Jefferies says that the consumer staple sector has outperformed it again in the financial year 2019, and going forward in financial year 2020, the brokerage is expecting the demand trends to be stable for the sector led by the rural segment. Now, for FY20, the brokerage is expecting the companies to focus on top line and find new growth avenues, which in turn will lead to a pickup in innovation, but also increase the competitive intensity in the sector. On the margin front, the brokerage is expecting the margins to increase, given the fact that the raw material prices have been stable, so there are no cost pressures that is coming in. But the only thing that could pose a risk for this margin growth would be the competition, which could put a margin cap, says the brokerage. Lastly, on the valuation, the brokerage says that the consumer staple sector valuations are still stretched.
All right, Amit, thanks a lot for that. Some more brokerage calls. We're focusing on Coal India too, Nikki.
Well, for the month of Feb, decent show, but then if you look at that on YTD basis, or for that matter, if you're looking at the financial year, looks like the company is again going to be missing out the targets, the trend that particularly has been since FY13. YTD basis, Coal India production 6.6% growth out there. In terms of dispatches or the offtake, that number is 4.5. In the last month of Jan, we saw a dip coming in on the offtake, but this time around it's a 3% growth there year-on-year basis, mainly on account of the recovery that we've seen in Mahanadi coalfields along with the southeastern coalfields, which contribute to nearly 50% of the overall production. Based on that, Morgan Stanley suggests that volume growth should gradually improve from the lows and imports should moderate here on. That's what Morgan Stanley has to say, but then UBS has actually a contrary view on this one. It says that the volume growth still remains very a cause of concern for the company as such, because this is mainly on account of two reasons. One, where the rail evacuation infrastructure is not in place until now, and they're seeing limited amount of demand coming in from the power sector. But then do bear in mind the fact that consensus rating on Coal India is 75% of the analysts covering the stock have a buy rating, suggesting a potential upside of more than 25% on this counter.
Right, Nikki, thanks very much for that. So those are some stocks that you need to keep an eye out on in terms of brokerages, some stocks news in Coal India. Mayuresh, just coming back to Jet Airways, another few aircrafts that have been grounded takes the total tally, I think, up to 25. Though they have a deadline of 180 days to come up with the resolution plan, what's it looking like from an investment point of view, whether or not this could turn around the company and you would see benefits kicking in once the resolution plan is put into place?
I think let the resolution plan come through, Devina. It's as simple as that, because it's so many things happening for the stock. Obviously, the stock is going nowhere. The second element in terms of obviously higher crude prices and the rupee depreciation hits airline companies' reported numbers pretty hard, because these two key variables determine the sensitivity to earnings, at least from a medium to long-term perspective. So I think one can have a rough estimate in terms of how these variables can play out, and therefore act on in terms of estimates that one can actually decipher for the companies as a whole. But I think it's too hyper-competitive at this point of time. So when you're talking about the cost per available seat kilometer ex fuel, I think that still remains at elevated levels. When you're talking about the revenue per available seat kilometers, you might have seen the number of offers that are floating through in terms of ticket pricing and the hyper-competition existing there as well. So the yield component, I think, still remains very, very soft and patchy for these companies as a whole. And though you're probably entering one of the strongest seasons that the aviation companies enjoy, the summer season, I think it's going to be very, very interesting on how all these facts pan out. So I think, again, it's something that one really needs to watch out for, how the resolution probably plays out, then probably play a call and take a call, in terms of how numbers might stack up post the resolution that is being offered.
Okay. A bunch of other stocks to discuss with Mayuresh. There is PFC, REC, and this whole conversation around how much will PFC pay for REC, maybe not northwards of 12,000 crores, and the REC chairman having been moved out of his current position as well. So REC would remain a stock in focus. Lots of queries about Rain Industries, Diwan Housing, Bharat Gears, and a few others. So we'll try and talk about all of those. But time now to get in our technical experts and derivative experts on board. Manoj, Vayalar and Amit Harchekar, both of them join in with their sense of what's happening in the derivatives and the charts. Gentlemen, both of you, good morning. Thanks so much for joining in. Manoj, let's start off with you. How are you viewing the trade positions right now? The options data seems to suggest a very tight band as of now of 11,000 to 10,700. What would your index positioning be?
Yeah. Good morning. Now, we all know that the Nifty started the weekly expiry from 11th of Feb. Now, ideally, what a weekly expiry does, it gives you the right, maybe 4 times the right what a monthly expiry was doing it. So it is, if you remember, we had stock options which used to be American options denoted by CA and PA. So unlike an American option which can be exercised every day till the day of expiry, this gives you a weekly right. So more or less you can say this is such rights which you get 4 times a month versus what you used to get once a month. It has given you some more privilege to the option buyer as well as the seller. Because of that, the premium of the option goes up, and if you say, let's say a monthly call option which ideally used to be around 100 odd rupees, today costs around 112 odd rupees. So that 8 to 12% extra surge in the premium which is coming is because of these rights which are being available in every week. Now what happens is when there is a calculation for VIX, it takes into account the at the money strikes, call and put options. So obviously an increased premium in the call and put option would certainly give rise to an increased volatility, which does not mean that the market is going to tumble down. It means that the options have more right, so that is exactly why the VIX would be at a premium. Now if you see, the slab used to be around 9 to 10 on the downside, and possibly hello.
Sorry, I think we lost Manoj's answer a bit. Manoj, maybe we lost your answer, but nevertheless, so I don't know, we somehow lost you halfway, but having put all of this into perspective and tell our viewers who might be wanting to know, what should an index strategy be today?
Right. Now, when we started this contract of March, if you see, the Nifty has Nifty and the Bank Nifty both have started with very less open interest with what we compared last month. But on Friday, there is a very next day of expiry. The Bank Nifty has seen good surge around 23%. We believe that we have opened, with the SGX down almost 100 points from the day we closed the market on Friday. I guess we are opening at the weighted average price. In the event we see the Nifty taking a support, which I feel it might take closer to 10,750 to 800, there is a good possibility of 11,200 which we might see into the month of March. So a better strategy here is you either buy the future somewhere close to, let's say, 10,800, keep a stop loss of close to 100 rupees on the downside, 10,700, and the target here should be 11,100 to 11,200. Or flip phrase, you simply buy 11,000 call option and hedge it by selling 11,300. So get into a call spread, wait for the entire month, and we are expecting a good risk reward on that. Same goes with the Bank Nifty. Buying at 28,000 call option monthly expiry, somewhere close to 80 to 90 odd rupees is what we recommend. The target can be a good 300 rupees on that.
Okay, got that. Amit, Harchekar, what would your index call be right now?
Well, I have a positive view on markets. We think this market is going through a phase of accumulation, and Nifty could be into this range of 200 points. But good thing is, if you see the ratio of Nifty to gold Bs, which is currently trading at around 3.73, but if you look into that, the price data on last 3-month basis, it has recently given a breakout from a bullish pennant, and we expect this ratio to now test levels of around 4.2 to 4.3 in the coming months, which means an upside of 14%. So first time, almost after around 3-4 months, this ratio is indicating a trend reversal, and which means fund flows from even safe haven could be coming back to Nifty in the near term. We have already seen broader index outperforming Nifty in the coming days, but right now we think this market is poised for a rally. In case we have a lower opening, I think the strategy should be going long on Nifty. From a short-term trading perspective, the stop loss for the Nifty future would be at around 10,700, and we are expecting Nifty to move towards 11,100. And Bank Nifty, I would wait for a breakout above 25,250 to initiate long, because so far Bank has been the laggard from an index perspective. The rally has been majorly led by some index like Bharat 22 index or Nifty PS index. So would be a bullish, would be having a bullish bias, but would keep a stop of 700 on a short-term perspective.
Okay. We will come back to both our experts on their stock-specific strategies, but in the meantime, let's move on to a special segment, Bloomberg Edge, where Yash Upadhyaya tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are tracking Escorts on the charts today, and we are using the proprietary trender indicator, which is signaling a buy call when it comes to the tractor maker. Let's first try and understand what it is and how do you interpret it. Basically, the trender uses the average true range for the purpose of calculation. It helps generate a buy and a sell signal, and also helps manage your stop loss. How do you interpret it? You go long when the trender indicator flips its color from red to green, and you go short when the indicator turns from green to red. In the case of Escorts, as we could see, the trender line over here, which is at the red line, is at the mark of about 671. On the back of heavy volumes and good, February auto sales numbers, numbers. The stock managed to close 2.5% higher the day before, and on the back of it, it has managed to cross above that, and it closed at about 674, very close to the highest point of the day, which has flipped the tender color from red to green, indicating that there could be a potential upside. Also, with the move that we saw in the last trading session, net it has ended positive on a weekly basis, which is its first weekly positive gain over the last 7 weeks. So possibly with all these indicators, it is likely that we could see an up move as far as Escorts is concerned.
All right, and how well has this worked in the past?
So they've been 4 out of the last 6 times in the last 1 year that the indicator has turned positive. Over the next 10 trading sessions, one could watch out for average returns of close to 4%.
Okay, great. Yash, thanks a lot for that. That is BQ Edge. But for a deeper insight on Indian equities, visit BloombergQuint.com, where we identify technical triggers that have emerged in a specific stock or sector every single day. On today's Bloomberg Edge, we feature strategy on the Nifty and what its price volume charts are indicating. That's a BQ Blue exclusive.
Okay, let's talk about specific stocks. Amit, I'll come to you first. Your 2 stock recommendations for the morning.
Well, I have a first buy on GAIL India. Now, the rationale behind GAIL is, if you see the Friday's trading data, there is a good breakout which is seen in BSE Oil and Gas Index. And good thing is this breakout has happened after a lot of volatility, and the structure is a bullish symmetrical triangle. So, if you see from a other perspective, that Nifty PSE index has already given breakout in the previous week. So we believe the GAIL is one stock which is poised for a move of more than 10% in the near term. Here the rationale is we are expecting GAIL to test levels of around 365. Good breakout has happened around 335. So we would recommend a stop loss of 330. Second pick would be buying ITC futures. Here, though the stock has been moving sideways since last 4-5 days, but the volumes has been increasing. And good thing is the BSE Bharat 22 index has already given a strong breakout, which is again helps ITC to move up. ITC carries around weightage of around 15.5 to 16.5% in that index, and we think ITC could be heading towards levels of 296. So from a very short-term perspective, we would recommend keeping a stop loss of 272 on futures and play for a target of 296.
Manoj, very quickly, would there be a stock that you would recommend to our viewers today?
Yeah, I would second Amit on this. I guess ITC is seen good buying, and there is a good upside. We are expecting a positional target of close to 320 on that. I know it sounds very optimistic at this point of time, but there is good buying. This levels of 264, once it is surged, we have seen the VWAP concept working good on the stock. So at 275 to 78, we recommend buying that, and we expect the same target 296 first, and second would be 320 on that. We like Hindalco as well at 196. We recommend buying that. We are expecting a positional target somewhere close to 208 to 212. The stop loss should be, let's say, a 188 on that. And the third stock is, because we are positive on banks, we like Axis Bank as well. So we recommend buying it between a 698 to 700. The stop loss should be good 686 on that, and a good target of 740. Now these are the eventual first fortnightly targets that we are expecting on the stock to come in. So close to 740 is what we expect on that.
It's very interesting. Keep in mind, this is the 4th buy call on ITC from a trading perspective that we've gotten on IndianOpen itself in the last 3 trading sessions, I would reckon. It's been around these levels, so it's not really moved too much, but it's the 4th call that we've gotten on ITC. So do watch out for that name in today's session or over the course of the next few days. What else? There is news flow around PFC REC. Mayuresh, PFC chairman apparently saying that they'll not pay more than 12,000 for REC. REC chairman shunted out as well 4 months before his position was due to get over. Do you think REC could react today? And what would your stance be here on both of these?
So one really needs to look at the exact quantum that gets paid out. The second element, obviously, that the street is concerned is the amount of debt that they'll be probably taking up. So I think I've been hearing the interviews of the PFC chairman as well, and he seems pretty confident that there might be some sell down of assets that might come through, and even resolution on a few of the assets where I think the provisioning that they've probably done might actually get reversed. So the implementation of the Saubhagya scheme and any positive contours coming out of that and any reversals, I think, is obviously going to impact the financials on a positive note. The third element obviously is the existing loan book at this point of time, and majority of the loan book, more than 82%, is to government-backed entities. So to that extent, I think the extent of default or payments not coming through probably seems very, very abysmal. The second element obviously is the private sector, and the provisioning that PFC has done of 52%, REC 48%. I think the managements are pretty sure that that probably suffices any defaults that probably come through on the private side of the business. So I think it's going to be very interesting. A, I think how much the payout actually happens. B, I think what kind of a leverage does that actually build up on PFC's books. And third, because of the Saubhagya scheme, I think whether there are reversals because of the resolutions on the provisioning amount, which probably alleviates the stress in terms of their P&L, and subsequently I think improvement in cash flows. So I think it's going to be very, very interesting, but I think investors who probably hold the stock should continue holding.
Okay. Keep in mind, the couple of other names that will be in focus would be stocks like Hindustan Foods, wherein Sixth Sense Ventures, Nikhil Vora has gone out and sold a seasonal large piece of stake. So that will be a company in focus, Hindustan Foods, that one in focus, as well as watch out for what happens to Jet Airways in the session today with more aircrafts being grounded.
Yep. Pre-open in 15 seconds. You've got no major cues coming in globally. SGX though is marginally in the red, about 0.1% or so. So 10,832 on the SGX Nifty. Rest of Asia looking slightly more weaker in trade right now. That's the Nifty 50 pre-open for you on your screens. A positive open there. Remember, it's a truncated week. We missed out Monday's session, so you're going to see a catch-up in today's session as well. So that's the pre-open ticks on the indices, but individual stocks will take center focus right now as these prices start to cool off and consolidate. On the Nifty so far, you've got Tata Motors, which is up 9%, almost 10% for Tata Motors. Again, this is not something that will stick. Wipro is up about 2.5%. We've got Titan, which is up about 2%. HDFC Bank, 2%. ICICI Bank, UPL, that's up about 2% in the session. HDFC Limited, 1.5%. HCL Tech, Reliance Industries, 1.33% or so. Vedanta, JSW Steel, Power Grid, Maruti Suzuki, that's up about closer to 1% in the session. And amongst the bigger losers, you have GAIL, which is down 2.8%. IOC is down 2.5%. Yes Bank corrects a bit, some profit taking. Friday's session was amongst the top gainers on the index. Today's session gives up a bit. Bajaj Auto, that's down 2%. Hindalco, SBI, Aisin Motors, some of these stocks will also see a reaction to the auto sales numbers, but Tata Motors is still standing strong out there. Remember, Friday towards the end of market, we broke the exclusive that GLR may be looking to sell off some stake, but the management actually came back and said that there is no such deal on the table as yet. It's too premature to talk about anything as such. But the stock though is definitely still holding on. Let's see in the next few minutes if it cools off.
Yeah, that will be interesting to see. The domestic sales were down about 3%. The estimates were about 60,000 and the numbers came at 57,221, but the stock pretty active. Maybe the news flow around the stake sale could be the dominant force on Tata Motors over the course of the next few days as well. 10% lower, higher. Let's see, it might change. So might Jet Airways, because it's looking like the first tick is showing a downtick of about 10%. I don't know if this news flow will bring about a 10% downtick. I doubt really, because now we've been hearing this news flow about more planes being grounded almost every single day. But a 10% downtick, let's wait and watch. Again, Sun Pharma Advanced Research, yet another stock which very active in the first 1 minute and then tends to change color pretty actively as well. I want to see if Hindustan Foods is reacting at all. It's not a very liquid stock per se, but 6 cents selling out a large chunk. Let's see if that's brought about any reaction. No. I want to see if PFC, REC are reacting at all, and REC in particular is reacting at all to the news flow. PFC unchanged, REC should come up. Well, no, not too much. And last but not the least, a couple of active stocks from Friday's session. So CG Power and Reliance Power from the power space were very active. Let's see what they are up to. Well, both of them marginally off. Actually, no, Reliance Power marginally higher, so it might well continue from where it left off. And some of the cement names, Sanghi, etc., were very active in Friday's trade. Let's see if they are reacting. Ramco Cements and Sanghi Cements, well, about 61 now, or around 61 for Sanghi. Ramco, 690. So that strength in the cement names too seems to be continuing. Actually, in any of these stocks, Amit, Harchekar, Asangi Cement, India Cement, Ramco Cement, they've been very active the last few days.
The good thing is we are seeing rally across the commodity space, and that's why we seeing Nifty Commodity Index outperforming Nifty with a very good margin. Based on relative strength, we think ACC is one stock which has recently given a breakout above 1435, and we think on a weekly basis this stock is now poised for hitting a target of 1550. So we think ACC remains a good buy. Now the stop loss for your long trade would be at 1440 on a closing basis. Second would be Ultratech Cement. Here too we are expecting a major bottom taking place at around 3500, 3400, and from now we are expecting the stock to rally towards 4200. So the reason the stop loss for your long trade, if you are initiating longs here, would be at around 3500. Here too we think a lot of long positions have got built into.
Okay, got that. Just stay on with us, gentlemen. Mutual fund managers are turning cautious on their bets, perhaps why the country's third largest fund house took calls based on news flow. Yash Upadhyaya is back to tell us what SBI Mutual Fund bought and sold in the month of February. Yash.
Morning, Devina. We'll start with the stocks wherein they have increased their holding, and Tata Power for a second straight month tops that list. So they have bought in close to 1.3 crore shares there, along with a whole host of the large Nifty names with a skew obviously towards the financials, as we could see ICICI Bank and SBI feature in the list over here. 98 lakh shares bought in ICICI Bank, and close to 43 lakh shares coming in for SBI, along with ITC and Vedanta also seeing some amount of buying. As far as the stocks wherein they have reduced their holding, no clear trend emerges there, but again it's a mixed bag. Sun Pharma tops that list with close to 1.25 crore shares gone out there, along with BPCL, HDFC Bank being the top three names. Vodafone Idea and as well as Tata Motors is also there, close to 39 lakh shares sold there, and Vodafone Idea about 43 lakh shares. But moving on, let's also take a look at which are the stocks which enter into their portfolio for the very first time. And interestingly, they have significantly bought stake in Infosys, wherein they have bought close to 7.5 crore shares in the IT name, along with Viatech Vabag. They also subscribe to the IPO of Chalet Hotels, and they have bought in close to 21 lakh shares there, along with Arvind seeing about some 3.18 lakh shares coming there. What goes out completely from their portfolio is the likes of Everest Industries, PFC, wherein they have sold a sizable number of shares, more than 8 lakh shares when it comes to Everest Industries, and close to 3 lakh when it comes to PFC. Godrej Agrovet and interestingly Vinati Organics from the specialty chemical space, it has been doing very well, but that moves out completely with the 55,000 shares that it had being completely sold in Feb.
All right. Yash, thanks very much for that. That is what SBI Mutual Fund has done in the month of February. Tata Motors is still your top performer on the Nifty in pre-open session, though not with 10% gains, but just 2% gains right now, but still at the top. 184. Mayuresh, do you think the worst is behind for Tata Motors?
So one would presume so, Devina, but again, I think if you probably look at numbers, again, numbers remain extremely soft and lumpy. What they've probably done in terms of the write-off on their balance sheet, in terms of the impairment and the expectations of the Chinese business, which is a high margin business for JLR, still expected to take some time to probably pick up. And what probably happens in terms of the impending electric vehicle mobility kind of research and development costs that one really needs to incur in lieu of what the competition is doing. My own sense is that it's still going to be an uphill task for Tata Motors, both in terms of having a volume-based realization leverage on their balance sheet at this point of time. Again, the emission norms, specifically in the European area, and the kind of expectation that one needs to do in terms of tweaking, in terms of their models, also is an important cost angle that one needs to look at. The domestic business is holding up, but again, I think that's a very small proportion to the EBITDA performance of the overall group. So I think the worst might be over, but again, I think the stock probably is expected to languish because of the softness that it might report.
Manoj, just comment quickly on a TCS and Infosys, or even for that matter, an HCL Tech or a Tech Mahindra within the larger IT pocket?
See, I guess the IT has been taken over by cement as a sector, and we believe there is good buying which has seen. See, there is a sector management which goes on. So I would shy away from IT at this point of time. Rather, I guess I would second Amit on the Ultratech cement or the Ultrachem you were saying here. So we believe that 3,800 to 4,140 roughly, that's the range we might see for this at least the first fortnight. So I recommend buying an Ultracap at 3,800, keep a stop loss of let's say 33,700 on the stock, and the positional target we have is around 4,140 on that. So that would be a buy recommendation from Harsha.
Okay, watch out for those stocks. Just a quick update. Just want to see at the end of the first 8 minutes what the pre-open rates are suggesting. It's a flattish kind of a move, marginally in the green for the equity indices. The bond markets and the currency should just come up on your screen for a moment as well. Let's see. We already marked the rupee, but 70.84. That seems to be doing okay. The bond yield should come up on your screen as well for just a moment. 7.36. So it's around the levels at which it was, or they were, when the budget release happened. The other set of stocks which have had a really good run in Friday's session were the power names. So Adani Power was flattish, but CG Power, Reliance Power very active. Tata Power was up 2.5%. Amit, Harchekar, quick views out here. Any of these power related names that you would trade?
I think Adani Power I would look into for buying it above 50. 50 is a major hurdle. If that is crossed, I think the stock would turn into a buy zone for a target of 55. Till then, I think it's a range bound between 47 and 50 on the upside.
Okay, watch out for all of these. Minutes away from market open though, less than 5 minutes left for the markets to kickstart trade. Let's tell you all that you need to know to stay ahead in trade today. First up, mixed February sales in the two-wheeler space. Bajaj Auto and TVS register gains, but Hero MotoCorp as well as Royal Enfield failed to meet the required thrust. Eicher Motors likely to start off over 2% lower.
SBI falls to fraudsters. The bank has reported frauds of nearly 7,951 crores during the 9 months of the current financial year. All accounts have been classified as NPA.
Zomato has cut away its UAE delivery business for $172 million. This adds $105 million to recent fundraising efforts. Parent InfoEdge now holds 26.4% stake.
Himachal Futuristic Communications has won an order worth 527 crores from Jharkhand Communications Network. The order falls under the BharatNet Phase 11 implementation.
Coal India sees production rise 6.5% in the month of February. Offtake rises about 3%.
And lastly, HT Media acquires 48.6% stake in Next Radio for 171 crore rupees.
Well, one stock that seems to be under a bit of pressure is Eicher Motors on the index, and at the broader end of the spectrum, Jet Airways, which amongst the Nifty 500 stocks is the top loser, down about 4.5% at 224. Now the fleet size less than 100 planes.
Yeah, that's a stock to watch out for. The other one probably you should look at is an InfoEdge to see what that stock's doing in pre-open. It's up about 2% but looking to raise about $400 million from 3 to 4 German companies in Zomato. So that particular one is going to be in focus to about 1830 is where the stock's trading at. Mayuresh, anything specific that you would like to look at right now?
I am inclined towards paper stocks and gold financing companies for a length of time. I think both these sectors, in my opinion, should relatively do well over the next 2 to 3 years. In terms of what you probably see for the gold financing firms, for the NBFC universe as a whole, I think the liquidity crisis probably does not impact their balance sheets, as I've time and again repeated, and that is probably getting justified by the numbers that they are posting. The second element is that the costs might move up, but the NIMs and spreads, because of the pass-through effect, obviously holds up. The Tier 1 ratios specifically, I think, are pretty good at this point of time, which gives it the necessary leverage to fund its balance sheet expansion. And fourth, I think the non-gold AUM part is increasing at a very decent clip, which probably gives support to the return ratios, specifically the elevated ROAs and ROEs, which should probably get maintained. For the paper stocks, again, I think if you probably look at the numbers for 9 months for this fiscal year, I think the kind of imports that are that have got reported, I think they are not that substantial. So to that bit, again, the expectations of more supply coming through is going to be very, very gradual over the next few years. Demand is still expected to hold up, which means that the realizations in terms of paper prices should hold up. The input costs have probably stabilized at this point of time, which gives it the leverage that they probably need to probably return to probably have better return ratios. And the third element, obviously, I think is better integrated companies with less leverage obviously are going to stand out over the next 2 to 3 years. So I think it's a consumption theme that I'm probably banking on over a longer period of time.
All right, the gold financiers and paper companies is what Mayuresh is positive on. A minute and a half left to go for market opening. Just quickly running through the top calls of both our technical experts. We'll start off with you, Manoj. What is it that you're looking out for trade this morning?
Was that to me?
Yes, Manoj, the question was for you.
Yeah, I guess I'm optimistic on the bank Nifty, and as I said, we'll be going with a 28,000 or a 28,500 call option for the monthly series because we believe that the positional move of around a good to 600 to 800 odd points can come in. So you will simply buy a 28,000 call option monthly series for the bank Nifty around 100 odd rupees. Maybe keep a stop loss of close to 6800 and the target is around 180, or you buy a 28,500 call option. I guess yesterday's closing is 32. The stop loss should be around 1800 and we're expecting a target of 54 to 58 on that.
Okay, Manoj, we'll let you go on that note. Thanks so very much for joining us this morning. Amit, your top call, quickly.
I would be buying L&T for a target of 1350, and on a positional perspective, we are expecting even international gold prices to correct by 15%.
Okay, so Larsen and Toubro is top call from Amit Harchekar in the session today. Amit, just stay on. We'll take in opening thoughts from you. Post-market open, 18 seconds left for the markets to kickstart trade. Now, watch out for the power companies. They are looking like starting off well. Watch out for the cooling solution companies as well, because all of those seem to be in an uptick early morning session as well. So that's the other set of names that you should be monitoring in the session today. And sugar seems to be starting off on a good note. So 2 or 3 buckets at the broader end of the spectrum that you should monitor. But we're starting off flat, absolutely flat, 10,832. So in line with what the SGX Nifty was indicating for the Nifty, at least. The Nifty Bank, flattish in this session, about 65 odd points. So about 1/4% lower for each of the 3 key indices. The Sensex showing about 1/3%, and actually now worsening a bit, but nothing too dramatic. Bring up the mid cap and the small cap indices, and marginal gains out there, but flattish start. Essentially, there's nothing dramatic in open in the session today. Bring up the heat map and let's see what's happening to specific pockets of strength and weakness. A lot of red, but mind you, these entire set of stocks are less than 1% lower. So this breadth could change very, very quickly. But actually the gainers too, the best gainer is Tata Motors, which is less than 1%. So nothing, not too strong, the gainers list in the session for now at least, save for Tata Motors, which is up about 1%. iShares corrects about a couple of percentage points. The numbers, the February sales numbers lower than estimates. Larsen and Toubro about 1.5% lower. So do watch out for that. Maybe we'll ask Amit if he's willing to buy L&T about 1.5% lower or no. And watch out for the IT companies. They are looking like starting off on a slightly weak footing. Just 2 or 3 pockets or trends or newsmakers that I want to highlight before I hand it over to Devina. Some stocks from last week's and some stocks which are in news this morning. So firstly, weak February sales for both iShares and VST tillers. VST, however, starts off marginally in the green. The next set of stocks are the companies like PFC and REC, because of all the media reports surrounding them. PFC chairman apparently saying they'll not give more than 12,000 for REC. And both of these stocks, though, starting off very, very flat. Let's see if last week's movers, the power companies, are in focus and whether they are moving around. Not too much again. Just Reliance Power up about 3 percentage points. Otherwise, it's a bit of a flattish start. But on a day when the index has started off 1/4% lower, this is not too bad. Devina, what are you spotting?
So let's start off with Jet Airways. Obviously, the stock's down about 2.5% or more of the aircrafts getting grounded. Reliance Communications starts off softer, about 2.25% lower. MTNL sees some profit taking. Remember, in the last 1 month, the stock has anyways moved up about 11%, so some amount of profit taking that's coming in. Avanti Feeds is down 1.5%, and then you've got the likes of Mahindra Gas also, which is down closer to 1.5%. Bharat Forge is down 2.5% right now, so some amount of weakness that's come into that counter. However, it's more about the gainers this morning. Den Networks is up about 8.5%. Religare, and what a stellar move! The entire 7 days period, the stock has moved up 43% in a matter of 7 days, and the move on the stock continues even in today's session. So Friday, Thursday, stock was up like 20% a piece. Today, another 6.5%. Sadbhav Engineering is up 5%. You've got Symphony. Remember, we spoke to the air cooler manufacturers with regards to how the onset of summer is going to shape up. It looks to be a stronger start for Symphony this morning. Radico Khaitan is up about 3% odd. Reddington is up about 2.5% odd. Then HCL Info should pull up, and HFCL on their big order win, and Info Edge on their fundraising activities. HFCL up 1.5% odd. Then you have Info Edge, which is also up about 1%. Birla Corp has moved up as well, 3% higher. And the entire PSU banking pack. Remember, Friday's session, a lot of excitement around all of the names. Whether or not it continues into today's session. So 0.5% for Bank of Baroda, PNB up 1.5%, Union Bank, Dana Bank. These are the kind of names that saw about 5 to 6% apiece in terms of gains. So they're continuing with some gains. Allahabad Bank, though, seeing some profit taking. UCO Bank again up 1.5%. Parag Milk Foods also up about 3% odd, followed by Nalco. Remember, Nalco last week announced its dividend of 4.5 odd rupees. Stock's up about 3% odd right now.
Two quick more. Amit, Harchekar, quick thoughts here on a Symphony 1334.
I think the stock has clearly given a breakout about 1320 in today's trade. So we expect now the next resistance to fall between the zone of 1425 to 1450. So from a 2-day perspective, the stop loss should be kept at around 1285 on a closing basis and stay long.
Amit, we'll leave it at that. Thanks much for taking the time out and being with us. Mayuresh, Joshi, quick thoughts. Anything on Den Networks or an SML Isuzu, or for that matter, a Birla Corp on which brokerages have now started covering?
No, so I'll be really selective within this broader universe at this point of time, I think. But Birla Corp is something that we continue holding in our portfolios. The entire thesis in terms of cement volumes probably holding up, I think that should probably have a huge justification over the next couple of years. But I'm very, very choosy at this point of time within the broader universe needed.
All right, we leave it at Mayuresh. Thank you so very much for joining us with your thoughts this morning. Bringing in another prominent voice, Harsha Upadhyaya, Chief Investment Officer for Equity at Kotak Mahindra AMC, is joining us on the show right now. Harsha, thanks very much for taking out the time. How have you been putting in the pieces to the market movement of late at the start of the year? And, what exactly are the pieces to the puzzle that are missing right now, which could actually lead to a bigger upside for the index?
We believe that the market is going to remain range-bound for quite some time until election results are out. The key thing to watch out would be what would be the geopolitical situation and what kind of expectations are getting built into market in terms of the political setup post-elections. Apart from these two, one will also have to look at the earnings trajectory in financial year 2020. As of now, the market seems to believe that the earnings recovery is going to take place in financial year 2020, and accordingly the valuations are slightly on the higher side. And also the base case assumption for the market has been that there is not going to be any geopolitical escalation at this point of time, and also we could see a stable government post-elections. So these are some of the assumptions that the market is making, and we will have to watch out going forward whether these things will hold true or not, and depending on that the market direction will be known.
So if the thought is that the market is going to remain range-bound, where do the opportunities lie? While we're talking about the earnings performances, we're talking about external risks that the market is factoring in, the election coming about. Does one even look at trading or rather investing, changing portfolio, adding in new stocks to their portfolio ahead of elections, or just wait it out till that ride's over?
We believe that on a relative basis, mid and small cap valuations are much better, and to that extent our focus is going to be on mid and small cap segment, wherever the investment mandate allows us to increase weight in that particular category. So we'll be looking at across the board within mid and small caps, wherever we believe the earnings visibility is reasonably strong and valuations have corrected in the last 12-18 months. That would be the pocket to look at. This is not going to be sector specific at all. We would be looking more at bottom-up approach to find relatively better valued mid and small caps going ahead.
Having said that, Harsha, good morning. Even if you are bottoms up, and I'm guessing that you would be even otherwise, there would be some themes that you would omit because of the headwinds that the sector might be facing, and some themes which would have some tailwinds?
Right. If you look at the underweight positions as of now, whether it is large cap or mid cap, across the board we are underweight on automobile, telecom, etc. These are the segments of the markets where the competition is very intense, the profitability is under pressure, and we don't see that changing, at least in the shorter term. So to that extent, we have taken underweight position on these two segments of the market. As far as the overweight positions are concerned, we believe the economic activity that is going on in the economy will continue to gather momentum post-elections, and hence we believe some of the sectors where balance sheets are in good shape will be the ones to really benefit from this momentum gathering that would happen post-elections. So engineering, capital goods, cement are some of the sectors where we have overweight position. And also in financials, we are kind of neutral at this point of time. But if you look at the portfolio construction, we have tilted most of our portfolio towards private sector banks. So to that extent, private sector banks within banking and financials is an overweight position.
Interesting. What did you? There's some fear. Let's put it that way, because of what Donald Trump said with regards to reciprocal tax or otherwise. Would you reckon that this would put a cloud on some of these smaller pockets, auto components, textiles, gems and jewelries? Because I would reckon those form the larger bulk of exports from India into the US.
It remains to be seen what comes out of these trade tariff related issues, because for long we have been hearing a lot of noise, but nothing has really been taken forward. While we are cautious on these sectors for various other reasons, we will continue to remain cautious, not just because of the trade tariff noise, but fundamentally we believe some of the auto ancillary companies or some of the other exporters that you mentioned have business headwinds, and those headwinds will continue to play out even if there were no trade tariff related concerns. So to that extent, we will remain cautious on the entire basket. And as it is on the global commodities, we have been quite underweight. We are preferring to play commodities through local commodities, which is cement, rather than global commodities.
What could the theme, probably for the latter half of the year look like? While obviously ahead of these volatile events, the focus is shifted towards the safer haven stocks like IT, the service sector performers right now. Would that continue to outperform the rest as it's doing so right now? Or that's just because of the fact that the investment avenues right now are fairly limited and the currency moves are favoring the IT stocks?
We broadly have a neutral view on IT sector at this point of time. While it will continue to deliver earnings growth, it will not be too different from the market. And also we have seen sharp outperformance of IT stocks over the last 12-18 months. So to that extent, we may not see further re-rating of some of these stocks. But yes, in a market which is range bound, I think they are likely to perform in line with the market. So I won't say that there is too much downside in those stocks, and hence portfolio will have a lot of stability if you have some position in IT.
How would you play commodities? I mean, be it metals, be it cement, pricing power looks like it's coming back, at least for the southern-based companies. Oil and gas is a pocket, slightly more stable now on the crude oil prices, around that $65 per barrel mark. Would there be a theme here that you could follow?
In cement, we continue to remain positive. We have seen significantly strong volume growth for the last several months, while that did not turn into profits in the previous quarter, that is December quarter, mainly because the pricing did not really support. But there have been indications during this quarter as well as in this month that the further price hikes are taking place in cement across the board. And also we have seen some benign raw material price movement, which will also help cement producers. So overall, cement should continue to see strong volume growth, and the pricing increase that we have seen in the recent past, along with some softness in raw material prices, should help overall margins in the cement sector. So continue to remain bullish on the sector. As far as other commodities are concerned, which are global in nature, we do not really share the same view. We believe that either the demand is unknown or the pricing could remain volatile given what's happening on the trade tariff side. And as far as oil marketing companies are concerned, we are currently underweight on the sector. There is a question mark in terms of sustainability of future profitability in the segment, given government has changed the pricing mechanism there. So to that extent, within oil and gas sector, we would like to play gas utilities, which have more reasonable demand growth and also more stable business fundamentals.
So Harsha, we have a South-based cement company coming up in this discussion after your chat. Are you particularly bullish on the Southern Pack? Maybe you briefly mentioned it, but my question to you would be, how does one go about picking these companies? Because if you look at EV per ton valuations, which is the traditional metric, all of them appear cheap, but they've looked like that for a really long time now. So how do you choose companies in the southern region?
One common thread that we have among our portfolio cement companies would be the fact that wherever there is excess capacity and we believe that volume growth is going to sustain, we are betting on those particular cement companies, irrespective of the regions that they are coming from. So clearly, we are betting on the operating leverage that will come through when the capacity utilization rates go up. If you look at the entire industry, capacity utilization is in the low 70s. And if you can bet on some of these companies which have reasonably strong pipeline in terms of capacity and also are seeing good volume growth, then I think there is a lot of money to be made in this sector. And our call is over the next 3-5 years how cement sector is going to behave in the country, given that no new real large capacities are coming up on stream, and also there has been significant consolidation in the industry in the last decade or so. So our call would be to play this industry for the next 3-5 years with expectations of increased economic activity and also better operating rates within the cement sector itself.
All right. We leave it at that, Harsha. It was great picking your brains this morning and getting some thoughts from you. That's Harsha Upadhyaya there with his views on the market. We're going to be taking a very short break right here. The markets are not doing much, just about 0.1% under. But on the other side of the break, dealer checks indicate pricing power returning to cement makers. We talk to Mr. N Srinivasan of India Cements and speak to Girish Agarwal of DB Corp on factors that could lead to strong revenue growth in the coming quarters.
वक्त ने ली करवट और जीत गया जनता का विश्वास। 17 दिसंबर 2018 बना किसानों, ग्रामीणों और ग्रामीण अर्थव्यवस्था की नई बुनियाद रखने वाला ऐतिहासिक दिन।
मैं भूपेश बघेल ईश्वर की शपथ लेता हूं कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगा।
साकार हुआ कर्ज माफी का सपना। 16,65,000 से अधिक किसानों के 6,100 करोड़ रुपए के अल्पकालिक कृषि ऋण माफ करने का फैसला सिर्फ 2 घंटे के भीतर लेने वाली देश की पहली सरकार बनी छत्तीसगढ़ की नई सरकार। 10 दिन पूरे होने के पहले ही 3,57,000 किसानों को मिल गए 1,248 करोड़ रुपए सीधे उनके बैंक खातों में।
मोर कर्जा टोटल माफ हो गए है और जो सरकार अपन वादा कर रही से वो वादा पूरा करीस और एमे मोला और हमारे किसान परिवार जतका भी वहाँ रहे सबला बड़ा खुशी हुई और मैं इस सरकार ला गाड़ा गाड़ा बधाई देता हूँ।
कई हितग्राही किसानों से मुख्यमंत्री ने की सीधी बात।
नमस्कार, मैं भूपेश बघेल बोलाता हूँ। ऋण माफी के हमन घोषणा कर रहे हैं और आज आपके खाता में कुछ पैसा पहुँचीस?
हाँ जी सर, पहुँच गया सर।
बहुत बहुत बधाई।
आप भी बधाई सर।
पूरी हुई आस तो मजबूत हुआ विश्वास। नई सरकार के साथ किसानों ने लिया संकल्प, गढ़बो नवा छत्तीसगढ़।
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people, where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Welcome back. You're watching IndianOpen. Cement companies were sitting with a lot of idle capacity, which meant that pricing power has remained elusive for some time now. February was slightly different, especially in South India. The cost of a bag of cement went up as much as 50 rupees. So, should cement makers cheer this rise, or this was an aberration? Let's pose these questions to the largest cement player in the south of India. Mr. N. Srinivasan, the Vice Chairman and MD of the company, is joining in right now. Mr. Srinivasan, thank you so very much for taking out the time and joining in. Is that the case? Is pricing power looking like it could be back for cement players, particularly in southern India, and then the implications spreading wide to pan-India?
Actually, you have to look at it slightly differently. It is a fact that the last few years, cement industry has worked at low capacity utilizations. When I say capacity utilization, it is difficult really today to have a fix on it because there are so many grinding plants that what exactly is the capacity is a lot of work has to go in to find out what is the capacity utilization for each company. Even now, for example, you take India as a whole, the capacity utilization is, they say, is around 75%. But actually, it could be more. In the south, for example, the capacity utilization was 67, but in the last quarter, it went up to 70%. Now, there is a fact that clinker is not as freely available now as it was earlier. And I had even 2 quarters ago, I had said that capacity utilization is going up, and maybe by the time we come to the last quarter, this quarter, prices also will start to move, which is what is happening. And the answer to your question, will it sustain? I think so. Because this is, the increase is on the basis of fundamentals. The utilization levels are going up. Demand is good. It is not anybody's case as the demand, the year on year, the demand has been very good in the south. It grew at 14%. So I think the portents are there for prices to remain firm and move up. And also you must understand, in the last 2 years, we lost a lot of price. In a sense, you could also look at this as a correction that is taking place.
Srinivasan, you're saying that demand is also okay at this point, but most brokerages currently suggesting that maybe it's not good enough to sustain compared to the overcapacity that you're seeing within the industry, and that companies are still adding more capacity, which in turn will actually sort of limit pricing power. Is that something that could be a concern, or that's not the reality and there is no overcapacity in the industry right now?
See, overcapacity will be based upon what you state as your capacity. See, the next, this calendar year, for example, you will be able to clearly see whether the stated capacity is the real capacity. And therefore, to some extent, I think the overcapacity is not correctly calculated. There may be some additional capacity in some places. For example, today, if you take the west, north, central, and east, I think capacity demand is almost same. In the south, there may be a little bit of headroom, but I think that will also, the demand will catch up over the year. and particularly after the elections. I do not know what will be the effect of the elections, but post-election, definitely yes. The current rate of demand, if it continues, I don't see by the end of this year any real overcapacity any part of India.
You mentioned that you would see demand pick up post-elections. Now, in the current scheme of things, private spending, do you think has been going off? And do you feel that the additional demand that comes in from infrastructure spending from the government in the second half would lead to a substantial kicker for the industry?
In fact, the increase in demand over the last 7-8 months or 1 year has been triggered by infrastructure spending. That is spending on roads, dams, all across the south. There is huge demand for example, you take Telangana, that Kaleshwaram Dam is prepared to take any amount of cement that you can supply. At the same time, private sector individual house building also has kept pace. It is a combination of these two that has propelled the demand.
Okay, so it's probably already on that uptrend, as you say, and there's no additional bigger massive inflow of demand coming in from that segment, according to you.
It's also, you must bear in mind that no great capacity addition is taking place. And today, with all the environmental regulations, with the entry barriers into cement, which really prevent new players from coming in, and the fact that it takes 3 to 4 years to set up capacity, I think you will witness, cement, you must take a 3-5 year view. If I take that view, not much capacity is coming on stream, the demand growth sustains like this, I think it will augur good times for the cement industry.
Okay, let's talk about going back to the first question where you spoke that pricing has been improving and will likely stay this way. Is it enough to cover the additional cost burdens that we are seeing in terms of fuel and logistics?
That's a difficult question to answer, but I think today's price that prevails in the south, and which is the area in which I'm operating, is almost reaching the levels where it can cover costs. I think still some more increase is needed, which will, I think, take place. If not in March, at least in April, I expect that the prices will again firm up a little. And at that point, with the softening of fuel prices, expected softening of fuel prices, I think it is possible that it will match.
Also, could you, help us understand the movement of petcoke prices right now and the implications in the coming few quarters for the industry?
See, when the prices went down, the last 2 years, when cement prices were rock bottom, then the sensitivity to changes in petcoke price was very high. With current levels of price, with the expected levels of cement price, I think petcoke will play a lesser role in the overall scheme of things.
Okay. Anything that as an industry that you see could be a turning point? Like you said, prices are just about coming back to normal from the degrowth that you had seen earlier on. Anything in particular that you could see that could stall this move?
See, I said I do not know what will be the effect of elections. I can't foresee that. But even given the fact that elections, April, May will be consumed by elections, I still see post-elections a good growth. So at the moment, I do not see on the horizon anything that can upset the firm prices that are prevailing.
Mr. Srinivasan, the last time that we spoke, you mentioned these words very categorically that you don't know what they are doing with the cement, but they are simply gobbling it up. You referred to one dam or a southern dam in South India, which is also doing that right now. Is that true for the other infrastructure projects as well? No matter what the output would be, it will be consumed, at least within South India?
Yes, you see a lot of, if you look at the increase in cement consumption, a lot of it, the increase has not come so much from the housing sector as it has from the infrastructure sector. Roads, dams, bridges, I mean, across South, the construction is very strong. And almost all companies in the South, if you take for example, every cluster is almost fully sold out.
So in light of that, sir, and because there are multiple dealer surveys and some of the surveys not quite, all the surveys not quite in sync with each other, can I get a sense from you as to how prices have moved October, December versus Jan to Feb end right now? You would have the right pulse of how at least prices in South India have moved. If you can give me estimates, your estimates about what's happened in the other regions as well, it'll be wonderful.
See, the prices have not moved very sharply upwards in the north or in central India or east or even west, but they did not drop either. So you must read it from the point of view that they did not see any sharp drop in the last year or two, whereas in the south you had witnessed that drop. So that drop has been recovered. I think, see, there are so many brands of cement and there are so many regions and states, all the 5 states. So every company would have seen an increase of at least 15%, according to me, in the recent couple of months. And some may have seen even more, depending on how their brand is positioned. So it's a brand-oriented increase. Some could have seen an increase of 50 rupees, some could have seen an increase of 30 rupees, some 55 rupees. It depends on where their brands are positioned.
Which is the other point, which most brokerages actually are suggestive of, that it is the more premium brands that are likely to be able to sustain the pricing power. Is that so?
I think today the demand is so strong and broad across the spectrum that I think while that comment may be true, today I think all brands are enjoying improved pricing.
Just one last question, Mr. Srinivasan, before we let you go, and that's the likely volume growth that you see for the industry come FY20 and FY21. 7% is the estimate that we get. Is that close enough?
See, last year it was 14%. Now, this year, if the elections were not scheduled at this point, it may have been more easier to guess. But I think that 7 to 10% is what I would look at.
Okay. Mr. Srinivasan, one final question from my end as well. For the last 8 or 9 years, the valuation methodology for cement companies has been EV per ton. And somehow large companies like yourselves as well on an EV per ton basis remain cheap. A lot of people believe that the lower return ratios have part role to play out here too. As somebody who looks at and talks to investors as well as the sell side quite often, would you reckon that at some point of time the valuation methodology could change or needs to change as well? Because if we look at EV per ton, that's somehow not quite budging for almost any of the companies.
I'm not an expert on that.
I know.
See, I know to produce and sell cement, but it's difficult for me to answer your question.
Okay, fair call. Mr. Srinivasan, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Thank you. Thank you.
Okay, that's of course the view from N. Srinivasan of India Cements. Now, before we move on to the next conversation, I think we're getting some response from the Commerce Secretary of India responding to the tariff war, if I can call it that. Not really a tariff war really, but some comments that came in from Donald Trump with regards to the higher tariffs in India and how maybe reciprocal tariffs are in order. We'll just get those flashes up in moments from now. But I think there is some comments from the Commerce Ministry that have come out, and we'll try and get them in moments from now. While we just wait for that, flat for the equity market, so keep that at the back of your mind. 36,028 on the Sensex, the Nifty at 10,850, the Nifty Bank to lying absolutely flat. Just that the cement names, the ones that we spoke to, India Cements and a few others, seem to be doing really, really well for themselves. So India Cement is up about 3%. Look at, I think, Sanghi, Ramco, these are the ones that were doing reasonably well the whole of last week, and another couple of percentage points for Sanghi. Ramco about 3% at 707, and there's a big brokerage upgrade that came in on Ramco Cements too. So 2 or 3 names that are firmly in focus right now. Do watch out for some of these names. Okay, while we just wait for the Commerce Ministry comments to come in, it's time now to get in our next corporate on board. Less than 2 months away, for the general elections, an exercise that sets political parties splurging on advertisements and branding. And while the entire exercise may or may not win them votes, media companies certainly don't complain. A large chunk of the money, after all, one such player, which has a sizable presence in the India heartland, is the Dainik Bhaskar Group. So let's get in Girish Agarwal, Non-Executive Director of DB Corp, to talk about this, as well as newsprint prices, which have seemingly come off. Girish, good having you. Thanks for joining in. Conversations in the analyst community and the investor community are full of how the run-up to the elections can show a strong uptick in volumes and value for media companies. Can this uptick happen in the run-up to the elections, or is the street too hopeful?
So, okay, let me classify this whole run-up to the election in 2 buckets. One is the political advertising and the government advertising, and second is the general advertising from the industry player on automobiles, on consumer durables, etc. So the amount of advertising which comes from the political parties or the government missionaries is very limited. It's not much, and it gets offset by the code of conduct coming into the picture, where the regular advertising goes down. But because of the overall spend in the market by the government, whether it's on the infrastructure and all, the other categories like automobile and consumer durables, they start seeing some kind of buoyancy in their sales. And then they start advertising in the newspapers or television media or whatever, all that. So overall, we do get benefited by that.
Okay. So higher ad rates, and they seemingly have moved up for you in the last quarter to 13%, if they continue or if they improve. And post the election spend, IPL, World Cup, would all of these come together in a sweet spot for you in Q1 FY20?
So this 25% growth by the government on the advertising rates certainly is going to help the industry, not only in this quarter but the years to come, because this rate revision happens once in 3 years' time with the government, and it's the most welcome thing. In fact, it should be done every second year, considering the inflation which is already happening. So that's one good point. Second thing, because of the overall environment becoming positive, the advantage of the advertising comes to us. And on top of it, the summer season, education season, and the World Cup also coming in, and IPL also coming in. So all that does look forward. We all are looking forward to have a very, very positive impact. I would say as of now, we are sitting at a strong single-digit advertising growth. With all this, we should be touching the double-digit growth also in the coming quarter.
Interesting you say double digit. We already had a 13% ad growth in the quarter gone by. Can ad growth rate be higher than 13% then?
We are all working towards it. The Q3 was strong because of the Diwali festival in that quarter. So Q4 should be slightly lower than that. But we are hopeful that Q1 of the next year will be almost touching that number.
Okay. What about the circulation revenue growth? It dipped marginally in Q3, I think was about 3 or 4 odd percent. Can it pick up?
Next year, we'll have to take a call that do we want to take a cover price increase, because the growth in the circulation revenue comes from twofold. One is the overall circulation growth, and second is the cover price increase. So circulation growth impact of those 3-4% will still be there. But if we take a cover price growth, then another 5-7% can come from there. But that call, we are yet to take that call.
Girish, the other big talking point is about newsprint prices cooling off. What's your sense out there? Are the benefits material?
Yes, very material impact, because the newsprint prices are now have come down from the in the US dollar terms to roughly around $520, $530 US dollar. So I think that's a very, very positive impact, from coming down from almost $750, $800 to $730 is a big relief. So I think next year there will be a big impact of that in the profitability.
Okay, so would the benefits of these lower costs come in newsprint come in Q4 itself, or would you only see that come in the next year?
No. Why? Because quarter 4, all the consumption what we are doing is of the material which was bought in Q2 and Q3. So the actual impact will start coming from Q1 and Q2 will have the total impact.
Okay, so Q2 FY20 would see the total impact of these lower newsprint costs. Fair enough. Let's talk about the other businesses, Girish. How is the radio business shaping up for you?
So I think the radio will continue to grow in the same line because their expenses are taken care of already. The new stations which we launched, they all are becoming EBITDA positive. Already most of them have become EBITDA positive. So I think radio is shaping up pretty well. Good thing about radio is that there's no cost jump like newsprint in the print business. So their cost is largely steady, and whatever money, if they're able to get more from the market in terms of advertising growth, that's a straight away positive to their EBITDA. In the digital, as we mentioned to you a couple of quarters back, that we are now focusing on that we should be profitable from our platform itself rather than feeding the money onto the social media platform. So we have been very successful in that, and there's a number you see, and going forward, we believe the digital business will show some more profit.
Okay. What about the digital business? How are the revenues shaping up there?
So what we did, we realized in last 2-3 years time, we were, and all of us were spending money on the social media to get the traffic over there. You know, last year we took a call that we don't want to spend money to get the traffic from the social platform. So over there now we are kind of cost neutral. We post our news on the social media, on the Facebook and all that platforms to the extent where it takes care of the cost by themselves. So we are no more in that rut of getting more eyeballs in the platforms and, you know, kind of converting them, naming them as your traffic, you know, because what happens when a person comes to a particular platform, he or she sees the news of mine on that platform and he's not able to come to my website from that. So he said there's no point feeding that kind of consumer. So we are developing more on our app and our own platform where we want people to come on to danikbhaskar.com or divyabhaskar.com, and we are, you know, able to engage the customer over there, the reader over there. This has been able to help us to save the cost and to increase the revenue directly onto our platform, and that's going to be focused going forward also.
Okay. Have you been able to hike rates for digital offerings? And if you've indeed moved companies or viewers to your platform versus social media platforms, have the lower eyeballs on the social media platforms impacted your ad run rates?
Yeah. So what we did, we lost eyeballs on the social media platform and we lost the revenue on the social media platform. But at the same time, my cost on the social media came down drastically. So I'm a cash neutral in that kind of scenario over there. But on our website, where the traffic increased, and we were able to monetize that better.
Speaking to some of your peers, Girish, and they were saying that the radio business is no longer remain only a radio business. It will be a lot more than radio, bit of consulting, bit of job work, etc. What's the experience at DB Corp? How is the radio business doing that way?
So in what's happening in radio business, I think a large portion, maybe 20-30%, depending on the station to station, come from the non-FCT genre, which means we become an agency, an event manager or a ground operator for a particular client, and we deliver the eyeballs to them, response to them by doing the ground events, linking up to the print, linking it up to the radio and everything. So I guess that's the model which industry has evolved.
That model lead to ad rates or revenues going slower than what was the case earlier?
I would see it this way, that a large chunk, maybe higher percentage, started coming from the other activities, but the rates of the radio will not go down. In fact, it will go up only, because then I'm not under pressure to sell my inventory at whatever price, because I'm anyway making money from somewhere else. So I will add the premiumness onto my spots on the radio, and I'll offer some kind of benefit on ground to the advertiser.
Okay, so then my final question, if you're indeed so optimistic on all the three verticals, can you give us some sense of the CAGR growth rates for your business for the year ahead?
See, frankly speaking, we don't do forward forecasting because we don't believe in the crystal gazing. I can give you any number on an Excel sheet, but frankly speaking, looking at the overall environment, we have to look at every quarter. So I'm right now very bullish, very positive about the Q1 and Q2 coming forward.
Okay, Girish, we'll leave it at that. Thanks so much for taking the time out and being with us, and all the best for the quarters ahead. That's DB Corp saying that the material impact of the cool-off in newsprint prices will only come in Q2 because the newsprint for the current quarter and maybe even part for the next quarter have already been, the rates have already been locked in. So that's of course DB Corp. By the way, some news flashes coming on the screen from the Commerce Ministry. India's retaliatory tariffs on US will be under review. All trade issues are on the table for discussion. So some response was expected, and we have some response that has come in as well. But this is a moving picture because we don't quite know which shape and form it will take place. Donald Trump has shot off the hip. The question mark only is how much bite is there in the bark, and how and when and if can India retaliate to any kind of things that come about.
Yeah, commentary reserved for when we actually get something meaningful. But for the markets, 10,845 on the Nifty. That's down about 0.2% right now. We're going to wrap up this show. Thanks a lot for watching from Neeraj, myself, and the entire teams that has put this show together. The F&O show comes up next.